Guys, if you think the US and Europe are running fintech, you have not been paying attention to Asia. This week, Asia is proving once again that it is the epicenter of financial innovation. We're talking AI agents inside super apps, Hong Kong racing to become the world's digital asset capital, stablecoins embedded in real economic activity, and a fintech report that says APAC has hit its inflection point. Buckle up, this is your Asian fintech breakdown for March 2026. Let's start with the big picture. Money 2020 Asia just dropped their annual Future of Fintech in APAC report, and the headline says it all. APAC is no longer experimenting, it's executing. Based on surveys from over 130 senior fintech leaders, the region has shifted to full-scale production deployment across AI, digital payments, and digital assets. 61.2% of organizations have already adopted AI. Only 3.5% haven't even started exploring it yet. And 90.6% of executives say social good and financial inclusion are now embedded in their corporate strategy. Not CSR, core business. Southeast Asia is still the #1 growth target. 22.9% of fintech leaders say it's their primary expansion market. And the biggest priority? Fraud prevention. 63.5% of leaders say it's their top operational focus for 2026 because digital adoption has outpaced traditional fraud models. The data is clear. Asia isn't watching the future. Asia is the future. Now let's talk about Hong Kong, because Hong Kong is on an absolute mission to become the regulated digital asset capital of the world. The Hong Kong Monetary Authority just unveiled its Fintech 2030 strategy. The pillars? Data, artificial intelligence, resilience, tokenization. They even have a cool acronym for it, DART. And they're not just talking, they're doing. More than 75% of Hong Kong banks are already deploying or piloting AI across credit, risk, fraud monitoring, and customer engagement. Hong Kong is also accelerating stablecoin licensing. For the first time, licensed virtual asset dealers can now offer margin-style financing. An annual fintech investment is projected to exceed 100 billion Hong Kong dollars over the next 3 years. If you're building in digital assets, Hong Kong is the place to be. Okay, quick, raise your hand if you use WeChat Pay or Alipay. Well, those two apps now account for about 90% of China's $12.8 trillion mobile payments market. Trillion! With a T. And now, Tencent is taking things to the next level, reportedly building AI agent capabilities directly into WeChat. This is the shift from AI as a tool to AI as a platform layer. Meanwhile, across Asia, founders are spending 20% more on AI tools compared to last year, according to a study of 37,000 regional SMEs by Singapore-based fintech Aspire. Usage of AI coding tools like Cursor grew by 4.2 times. In Singapore alone, 30% of all new startups are now in the AI sector. In Hong Kong, 2/3 of new businesses onboarded in late 2025 came from AI. The AI wave in Asian fintech is not coming. It's here. Let's hit 3 more stories fast. 1. Ripple just announced plans to secure an Australian financial services license, expanding its footprint across APAC. 2. Indonesia's Kredivo Group just acquired Vietnamese digital bank Timo. This is regional consolidation happening in real time. 3. ASEAN's total digital payment value hit 1.4 trillion in 2025. It's projected to grow to over 2.5 trillion by 2030. Generational opportunity. And the Money 2020 Asia Conference is coming up in Bangkok this April 21 to 23. This is the event for Asian fintech in 2026. So what's the takeaway? Asia has officially crossed from experimentation to execution. Hong Kong is building infrastructure. China is building AI platforms. If you're not watching this space, you're missing the biggest story of our generation. Like and subscribe and let me know in the comments which country leads the race by 2030. See you next week.